morning to you. How are you looking at some of the key results which were announced? Let me start with your view on a Titan and an Apollo hospital.
Yeah, good morning, Tamanna. I think numbers have been much better than what the street expected, and I think you could see a positive up move today. My sense is most of the jewelry companies, including Titan, have shown a very strong ramp up in numbers despite a sharp increase in gold prices. But I think that clearly shows that typically the third quarter is a festive quarter, and you see a very strong kind of demand uptick in this period. My sense is that most of the management commentaries, from the gold jewelry companies has been pretty positive. In fact, January, February are also busy months for them because typically, a lot of festive and marriages happen in these months. So typically, I think even the fourth quarter should be equally strong. In fact, my sense is that if gold prices correct a bit, I think that would be a positive because that obviously helps them to improve their margins further. But overall, I think the sentiment is quite strong. I think gold jewelry companies, despite the fear that gold prices had shot up, I think have shown a good improvement in the margins. I think if you look at the smaller players like Kalyan, Senco Gold, even these players have done well. As far as Apollo Hospitals is concerned, I think a very strong trajectory. I think hopefully, we could see a stronger fourth quarter also. And I think clearly hospitals is a space which even the government has been encouraging. And most importantly, they operate in the specialty kind of segment. So to that extent, I think this is a portfolio stock. Maybe it may not move up significantly, but over the next say 12 to 18 months, I think definitely a good risk reward could happen. So I think we are constructive on both the stocks and equally both on the gold jewelry as well as the hospital segment.
Avinash's view on what we've talked about a plethora of stocks since this morning. What is your view, Avinash, in terms of some broader market picks right now, as we see some of these fears ebbing on trade deal, etc. But on the other hand, not that amount of momentum coming in that would have been expected.
No, I think, Tamanna, the trade deal actually culminating positively for India actually is good news for exporting companies. I think, companies from the textile and the auto component space could definitely now think of getting a better kind of, positioning in terms of sentiment. I think we'll have to wait for a couple of quarters before we see the changes getting reflected in the numbers. But I think textiles, typically, stocks like Arvind, Gokuldas Exports, on the auto component side, large companies like Bharat Forge, typically a mother son. I would not be surprised that possibly from the June quarter, you could see a little bit of tailwind coming on both the top line as well as on the margin front. And most importantly, even apart from the import tariff, I think large companies from the auto space like Tata Motors Passenger, which have just recently launched their Land Rover and Jaguar facility in Tamil Nadu, that could be an interesting bet because things are slightly improving. And of course, today Mahindra and Mahindra is going to put out its quarter three numbers. So this could be an interesting bet. The stock has been consolidating around 3,600 odd levels. My sense is Q3 will be a very strong quarter, and I think even the fourth quarter should be good. So I think these are kind of opportunities which the investor should look at. Of course, the hospital and the hospitality space is also buzzing. I think companies like Indian Hotels, or for that reason Lemon Tree, these are also interesting bets because the tailwind here is very strong. We expect a decent and a much better fourth quarter for these companies. So net, I think it's a stock pickers market. I think the index may be volatile. But I think broadly now the FIs seem to be coming back. And I think you need to now look at the quarter three numbers and do your homework and get into some interesting companies which should show a good trajectory in FY27 also.
People don't have to do too much homework. otherwise, there's going to be some new tool tomorrow. Avinash.
So I think Tamanna, AI cannot replace fundamental analysis. See, I think finally, there are many, experts who tell that AI will do everything. I think my technical guest will also agree that, the human intelligence is definitely going to be required. So, AI is not going to scare us. Okay. I think it's all about perception.
Okay, well, I think this is a story that is yet to unfold. Would you look at this SPAC closely as we're seeing the commentary come in through Titan?
Yeah, definitely. In fact, Tamanna, the gold finance companies also should do well. I think Muthoot is a market leader, and I think if gold jewelry companies do well, typically the gold finance companies are a much safer and a better bet, considering that there is a decent amount of concentration here. My sense is, the jewelry stocks possibly could see a little bit of profit booking because these results were anticipated as far as Moti Sons or Titan or Kalyan Jewelers or even Senco Gold. Numbers have been very good. In fact, there are many, largely uncovered companies like DP Abhushan, where the numbers have also been very strong. But I think gold finance companies could offer a better alpha considering the fact that, the asset quality is strong. And I think hopefully the fourth quarter should also be good. So I think definitely gold finance and gold jewelry could be in buzz considering the kind of numbers they have presented have been much better than what the street expected.
Numbers look decent. Britannia also very core to understand rural growth. Do you think on the face of it, with everything considered, GST, etc., labor code, they must have had an adjustment. But with the new CEO's commentary awaited, do you think Britannia is looking well set now for a sustained up move from here, Avinash?
Yeah, I think numbers have been pretty decent. In fact, Tamanna, not a very great, but not a very bad set of numbers. But I think today we are going to have the conference call. So I think, markets would be obviously looking at what the management commentary is, what the kind of growth outlook is. But I think if the commentary continues to be positive, and I think there are some new product launches, and hopefully the fourth quarter will be a better quarter because for them also, the rate cuts plus the rural demand pickup. I think probably the fourth quarter should be much better. So I think we are constructive, but I think we'll like to wait for the management commentary, which is going to be, scheduled today.
Avinash, what do you think about Jubilant FoodWorks? Because in the past couple of quarters, there have been a few debates about whether people are making different choices on food and whether this is reflecting in Jubilant's numbers. The numbers that came through weren't bad, actually. They were quite good. And in fact, positive updates coming from the turkey business as well.
No, I think numbers have been good, Alex, no doubt about it. And I think this was a pleasant surprise because markets were expecting margins to be under pressure. The competitive intensity has increased significantly. So I think definitely numbers have been pretty good. My sense is, yesterday the company had its con call. The management commentary continued to be quite positive. Somewhere I think the consumption, trend is now getting back. And I think hopefully, another 1 or 2 quarters of good performance. And I think these companies could be a good, bet now because, from higher levels, these stocks have been hammered quite badly.
Something else which did very well post its numbers, I think, is Force Motors. The numbers came in at maybe about 18,000 odd rupees when the stock was at 18,000. It's very quietly and surreptitiously moved all the way to 23,500 odd, right? And it's not cheap from that perspective and also from the ticker price perspective. But is it a business that you would want to own, or are the valuations now a bit steep?
No, I think at these levels, Neeraj, we prefer to hold it rather than make a fresh entry. But I think, one of the reasons why the stock has moved significantly is because, this is a very thinly traded stock, has a very small equity capital base. And that actually facilitates movements upwards in a very short period of time. So the business is good. I think the management bandwidth is also very strong. And I think they have a very large auto component business plus a little bit on the tractor business and the commercial and the LCV side. So I think we should see decent numbers even in the fourth quarter. But I would prefer to, look at this company at a slightly lower level. Although structurally we are positive at these levels, it's a hold. We would not suggest to buy even at the current levels.
Looking at HEG, the results seemed stellar on the face of it, but even in the sense of everything that we're seeing with export markets opening up, more investments in your newer spaces because of the trade deal, etc. Do you see HEG as an interesting story to look at right now?
Yeah, I think, Tamanna, the market itself is concentrated. I think for graphite electrodes, which cater largely to the steel sector, I think one thing is very clear that after a long period, consolidation has happened. I think, imports from China have also moderated. And I think to a large extent, we should see a strong quarter in the fourth quarter also. I think the profitability has moved up largely because of the expanded capacity coming in, some benefits coming in from the operating leverage. But I think hopefully, the kind of production volumes which we have seen in the domestic steel market and obviously metal prices going up, that actually is good news for an ancillary player which caters to the steel sector. So I think apart from HEG, even Graphite India looks interesting. I think I won't be surprised that the fourth quarter also should be equally good. Today, we'll have the conference call for HEG. And I think markets should be clearly watching on the management commentary and the kind of outlook shared by the management.
Okay.
Avinash, much as NBFCs are out of favor, there are a couple which will have some technical triggers like this. Is there an NBFC name that you believe is worth investing in even now?
No, I think clearly, I think we have been positive on NBFCs, in the truck finance business, especially Shriram Finance. That could be a good bet. My sense is that typically, when the CV cycle takes off, even the replacement market for trucks improves. And I think, we should be seeing better numbers in the fourth quarter. So I think, Shriram Finance at the current level, Neeraj, appears to be quite value accretive. I think from a medium to long term perspective over the next, say, 12 months, I think if the CV cycle improves, I think you could see a good uptick here because obviously the replacement value also picks up as soon as the OEM sales go. So I think Shriram Finance looks decently priced in this market if somebody wants to get a decent kind of return in the next 12-15 months.
Extend that question, Avinash, and I'm sure you've studied this. So from the banking space, what are the banks that have a large auto loan book, including CV space? If I'm not mistaken, doesn't IndusInd have a pretty large book?
Yeah, I think IndusInd has a very large book, but I think, see, Alex, clearly over the last 2 quarters, we've seen horrible numbers coming out. And I think markets are waiting for a little bit of clarity on the asset quality, on the provisions. So I think, somebody who's got a very high risk appetite could definitely look at IndusInd because, Ashok Leyland is a group company. They could possibly benefit from that. But I think, clearly even the public sector banks like SBI or for that reason, a Bank of Baroda or maybe even a ICICI Bank, these companies also have a decent, exposure to CVs. I think Cholamandalam is also another company which has got a large exposure to the CV basket. So I think these could also be better choices. IndusInd is slightly a risky bet because we don't know whether the fourth quarter is also going to be a washout quarter. So only investors who have the risk appetite and who can hold on for the next 6 to 12 months. Because recently, Rajiv Anand had given an interview to a private channel where he said that over the next 6 to 12 months, things would definitely improve. But we'll have to wait for the numbers to come out and see what kind of improvements are reflected in the numbers.
Ask about Apollo Hospitals and what Avinash makes of the numbers, because those marshals were better than expected. And Avinash, some of the measures that they've taken recently on the pharmacy business, etc., also working.
Yeah, exactly, Alex. I think numbers have been much better than what the street expected. And I think the fourth quarter is going to be equally strong. I think on the pharmacy business also, the kind of value unlocking and the kind of opportunity which Apollo, sees is also going to drive earnings over the next, say, 6 to 12 months. So I think, this is a stock where you need to take a portfolio view. It's a large, stock. And most importantly, with this kind of bump up move of 3-4%, my sense is that higher levels, maybe there could be a little bit of profit booking, but over the next, say, 12 to 15 months, I think the hospital space would do well. And Apollo Hospitals would definitely like to capitalize and grow quite well.